Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me today is Vinny Motiwala. Vinny, good afternoon. We started on the back foot and that has continued as well. Nifty around that day's low mark. We've recovered from the lows of the day, but still it's a 113-point cut. The mid-caps are underperforming and we have a lot to track on the show today.
Absolutely, a lot to track on the show. On that note, let's get started with the top headlines then. And starting with the markets, stocks like we're seeing see a further dip ahead of the F&O expiry today. PSU Bank, metals and consumer durables are the big tracks.
Broader markets bear the brunt of selling. Both mid-caps and small-caps indices are lower by more than 1%.
Anand Rathi Wealth trades with gains after reporting a steady set of Q2 FY26 numbers. The company profit rises 6% while revenue sees a 9% uptick to nearly 300 crore rupees. Net inflows down 22% on a quarter-on-quarter basis. Management tells CNBC-TV18 that they are maintaining revenue guidance for FY26.
IREDA gains on strong Q2 earnings. Profit after tax surges over 40%, while net interest income is up by nearly 50% on a YOY basis. Okay, all right, those are the top headlines for the markets. As we pointed out, it's a 100-point cut on the Nifty. It is at the 25,120 mark. The mid-caps are underperforming, 0.8% cut there. And the advance decline ratio, just look at that graph because that is indicating way more declines worsening the advancing stocks. Around 660 stocks which are advancing versus around 2,200 stocks which are declining. So there was a crisscross around that 10 a.m. mark, and that has continued to widen by the hour as well. Nifty IT is dragging the index lower. We do have all the sectoral indices in the red as we speak. PSU banks, metals, media, realty, all of them being the top losers today.
Absolutely. Like you're saying, top losers over there, most of the sectors, all of the sectors trading in the red as well. So keep an eye out on that. But on the positive side, we have CE Infosystems. Let's just pull that up because that's gaining again for the second consecutive day. We had those tweets that came in from the Ministry of Railway in terms of MOUs. That is something that we're keeping an eye out on. Anand Rathi Wealth in terms of numbers, IREDA, Force Motor, some of these are basket trades. So a lot of moves that is coming in over there as well. But in our segment, mid-cap movers, we now have Ria joining with us to take us more of these stocks that are buzzing in the mid-cap space and what is happening and the reason behind that. Ria, over to you.
Well, yes, when you're first starting off with the gainers, we have MTAR Tech holding on to gains of around 10% after that 13% move that we saw early in the session. And this is after Brookfield has backed Bloom Energy, which is MTAR Tech's key client, with $5 billion for fuel cells to power AI data centers. There's also Anand Rathi Wealth up around 7.5% after gaining around 11 to 12% early in trade. They've seen a good set of numbers in Q2, and they are also on track to achieve their AUM growth guidance for the year, despite a 22% sequential decline in their net inflows this time around. MCX India also going up by around 4%, extending its gains on active bullion trade. Landmark Cars also seeing a gain of around 9 to 11% after the total revenue of the company jumped by nearly 31% on a year-on-year basis. IREDA also seeing a gain of 3.5% after the net interest income of the company went up by nearly 50% on a year-on-year basis. Moving on to the losers then, Dixon Tech is down around 4% after Phillip Capital has issued a sell rating on the stock with a target price of rupees 9,085, which is a 47% discount downside from yesterday's closing price. And they have said this on the back of declining volumes in the company's key product Motorola. Natco Pharma is also down around 3.5 to 4% after the Supreme Court has agreed to urgently list Roche's plea on the Risdiplam launch. Other losers in trade today include Sagility, Bandhan Bank, as well as Reddington, which is extending its fall after yesterday's 3% fall, down around 3.5% today as well.
Take that point. Thank you so much for bringing us those names. So those are some massive movers in the broader market. Thank you, Ria, for joining in. Let's slip into a short break now. When we come back, management of Puravankara will join in next to discuss the FY26 outlook. They just released their Q2 business update as well. So that and a lot more after this short break. Welcome back. You're still tuned into Midcap Radar. Puravankara, that is the stock on our radar, released its Q2 business update. The pre-sales during the period were up 4%. Ashish Puravankara, who is the managing director at the company, is joining us now to discuss more. We'll understand their FY26 sales outlook going forward. Will they now expand via joint development, redevelopment, or more organic land buys? And the debt position of the company, considering that they are also on an expansion spree. Ashish, good afternoon. Thank you so much for joining in. The uptick that we saw this time in pre-sales, 4% higher, was it pricing-led or did you see similar increase in volumes as well? Can you give us a breakup of that? And what was the volume growth this quarter?
So in terms of pre-sales for Q2, we've achieved about 1,322 crores of pre-sales, which translates to about 1.5 million square foot, which is again about 4% higher year on year. In terms of customer collections also, I think we were up. We had a customer collection of almost 1,047 crores. For the half year, we have achieved about 2,445 crores worth of pre-sales, which translates to about 2.75 million square foot and customer collections of about 1,906 crores. Very important to note that all these pre-sales numbers have actually come in from ongoing sustenance projects. We still have to see the benefit in terms of sales contribution from our new launches, which are all slated for Q3 and Q4 of the year. From Bombay, from Pune, from Bangalore and Cochin markets.
Okay, so pre-sales right now is not factoring these, new launches that you've planned. Ashish, afternoon, Q3, Q4 then, what is the anticipation in terms of pre-sales numbers that we could expect? Could it go to the double-digit mark? And overall, also, have you already started seeing the pre-sales coming in from the redevelopment projects as well? If you could just give us an indication there.
So in terms of the new launches that we've planned, it's about 15 million square foot over the next 12 to 15 months. I would assume about 65% of that we should be able to achieve, I think, by March itself. So if you take that number and if you see our past history in terms of pre-sales of newly launched projects, we've been able to get almost a 70 to 80% of the phase that's been launched in the first 2 quarters. So that contribution should be quite healthy. Let me put it that way. In terms of redevelopment projects, as of now, we have not launched any, but we should see a launch in the next 2 months. All approvals, which is Lokhandwala, Pali Hill, which is Bridge Candy, as well as I think Malabar Hill, etc. I think we should start seeing the launches starting from 2 months from now. But all approvals are in place.
Ashish, how does it differ for a developer when you're going to launch, say, a redevelopment projects? What's the impact on the balance sheet in terms of cash flows? Do you need more capital for doing this? If you can explain that to investor, because now that will start showing in your books as well.
Sure. So pre-sales mimic what we traditionally do as joint development. So there is no huge upfront capital investment in terms of buying a land outright, but it is essentially your approval costs. And then once you get your approvals, the corpus fund that we contribute to the society, as well as their annual rentals as per our each transaction. So it's typically about 10 to 15% of the land value as opposed to buying a land outright. So very low on capital upfront investment for society redevelopments.
Okay. So how much will redevelopment be as a percentage of your overall portfolio, say 2 years down the line?
So currently what we've secured is about 4.25 million square foot in Mumbai for redevelopments. The GDV of that is about 10,500 crores. But we are actively growing and quite aggressive. We are in fact now pitching for at least 6 more projects as we speak. But I think the brand has been received extremely well in the West region. So in spite of healthy competition, we're able to secure these marquee locations. So we should see this number only grow.
Okay, you'll see this number only grow. But Ashish, from here on, so in terms of expansion plans that one could watch out for, would it be more JDAs? Would it be buying land, redevelopment side? What would the focus area be? And how much cash would you require for expansion? How much do you have in your books? What is it that we're watching out for now?
So I think if the half year gone by is any indication, I think we have done aggressive business development where we've secured projects, 2 in Bangalore and 2 in Mumbai, with I think a square footage of about 6.25 million square foot, with a GDV of about 9,100 crores. In terms of strategy, I think the combination between outright society redev or a joint development, I think the micro market in the city defines it. So, for example, if you have to grow within the Mumbai city limits, I think the biggest opportunity here is the society development. But now, if you go to the outskirts, like for example, Thane, etc., there you're able to secure vacant pieces of land, industrial land, etc. So that typically will be an outright. An outright is always, while there is an upfront investment to buy the land, but it's always a cheaper option in terms of costs than a joint development.
Okay, we take that point. Ashish, then what's the kitty set aside to take up the expansion plans? What is the updated debt number? What would it look like by the end of this year?
The net debt, I think, at the end of Q1 was about 2,845 crores. In fact, there was a net debt reduction of about 128 crores. I don't see that number on the residential front going up significantly. It would all depend on the commercial portfolio. So currently, we're building about 3 million square foot of commercial office space in Bangalore. So the construction finance required to complete those projects, would lead to some expansion in terms of the debt number. But as they get completed, which is slated for anywhere between I think March and April of this year, and you start leasing, you convert that debt into lease rental discounting at a much cheaper cost, which is generally the format for commercial development. But on the resi front, I don't see that number going up too significantly.
Okay. Ashish, just one thing, pre-sales FY26 target, what would that be? If you could just quickly give us that number.
So we don't give any guidances per se, but I think now, so currently we're building about 36 million square foot is what we have under development, of which we have opened up about 17,500 crores for sale in terms of phases. We have already pre-sold about 9,700 crores out of that. So if you take that number into account and add the 15 million and look at our track record in terms of sales, you should see a good jump.
All right, take that point, Ashish. Thank you so much for joining in with your thoughts and insights on the business going ahead. But a quick note for our viewers now. As you can see on the screen, there is a money control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, which include both current and historical financial statements, price charts, and technical indicators for each stock as well. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.
Welcome back to Midcap Radar on CNBC-TV18. Nifty 25,100 is what it's managing to hold on to. But LG Electronics, that's the one we're keeping an eye out on after they made a stellar debut on the exchanges, listing at a 50% premium against its issue price. My colleague Shilpa Ranipeta spoke with Sanjay Chitkara, who is the Chief Financial Officer at LG Electronics India. Listen to what they have to say.
See, it's a very proud and humbling moment. I mean, you're on the first day, 50% premium opening. I mean, that's something very amazing and very encouraging. I mean, I think it's a reflection of the trust which our consumers, partners, and investors they have kept in LG Electronics.
Correct.
And I mean, it's also a reminder for the responsibility which they have given to us, that we keep on doing good job, keep on giving more innovative products to our customers, and give a sustainable growth and margins.
Right. So, now it's a company with strong fundamentals. You're profitable, you're a market leader in all the segments. So, for investors, what do they now look at as to where the next leg of growth really will come from for LG?
See, it's a mix of LG fundamentals and India's fundamental. And India fundamentals are very strong. If you see, our IPO success is actually a vote for confidence of India's growth story and consumption growth story. And the penetration of our products is very less. If you see the product like air conditioner just 12%
Right.
penetration, or washing machine just 22%. So I mean, these products are just basic, and just to make daily life easy. These are no more luxury. So a tremendous growth is expected to come in time to come as the economy will grow. Apart from this, to accelerate this growth, we are taking a number of steps, like we are introducing a new lineup of products which will be targeted for the volume zone customers.
Right.
And we want to give them an experience for our premium products.
Right.
And on the other hand, we will also scale up our new businesses like B2B, information display panel, HVAC system, service business, and our third plant will also fuel the next level of growth in our business.
Right. So this new range lineup that you're announcing today, just help us understand, this is for the value consumer. So the price points will be slightly lower, more entry level than your current range of products. And also, how are we supposed to look at the margin profile of this lineup as well?
So right now I cannot give you the more detail about this, and very soon you will hear from us. So it's a very good option for budget conscious customer who are seeking a premium brand, and it's a very good combination of reasonable price and Indian inside features and functions.
Right.
And just to give you some color, maybe 8 to 10% lower than the current level of this product, we will offer a fully automatic washing machine and a double door refrigerator at a very reasonable price. So our idea is that our premium product leadership, we want to share with everyone.
Got it.
And we want to give access of premium product to everyone. Regarding our margins, this project we started roughly 1 year ago, and we did a lot of value engineering so that our margins should be maintained.
That's the big listing of the day. But with that, we'll take your leave on this edition of Midcap Radar. Do stay tuned. Our special, Diwali special Mutual Fund Corner is up next.